Good morning. Welcome to Trading Hour. It's a Wednesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Vinny Motiwala, and the markets are surging. We're at the day's high for the benchmark indices. The Nifty is now inching towards 22,300 with a gain of 200 points. Sensex racing away to a 600-point gain. Broader markets outperforming yet again. And the advanced decline ratio, that tells you the picture. Advanced decline ratio stands at about 2,300 stocks advancing for just about 300 stocks declining. And we're moving up on pretty good volumes as well. IT, FMCG, auto, media, these are some of the big sectors of the day.
Absolutely. And not only that, Reema, as of now, what I'm looking at, all the sectors today are managing to hold on to that green. So it's an interesting day, surely coming in for the markets. And good levels as of now is what the Nifty is managing to hold on to. Keep an eye out on that. 22,300 around that mark is what the Nifty is day's highest point as of now. Some of these other names in the mid and small cap space that I would like to highlight. Avanti Feeds, that's holding on to a 52-week high levels. There was some bulk deal that happened, change of hands. So watch out for that one. This is last evening. Now, Occam's Drug, that's also in focus. RVNL as well as eClerx are some of these other names that have been buzzing in trade, holding on to gains of almost more than 5% in today's trading session. Now, on the flip side, we have a stock that's in focus, and on the negative side is BSE. That's in focus. Why? We have some update that came in terms from NSE in terms of the change of their day of expiry. Let's actually go across to Vamakshi, who's here to give us an update on that one. Vamakshi, BSE clearly under pressure today. Give us the highlights, what's coming from NSE and overall in data terms for BSE.
Well, absolutely, Vinny. BSE is reeling under pressure today. Keep in mind that NSE has decided to shift the expiry day for the Nifty index weekly derivative contracts from every Thursday to Monday. The change will be effective from April 4th, 2025. And this change will be applicable also to Nifty monthly, quarterly, as well as half-yearly contracts and some other indices such as Bank Nifty as well as Fin Nifty. Now, given this announcement from NSE, why is BSE reeling under pressure? That's the big question, right? That is because BSE, keep in mind, had revised its weekly contracts expiry to Tuesday from Friday. This was effective Jan 1st. And since that period, the market share for BSE on Mondays has been at 20 to 22%, and on Fridays, it has been at 15 to 17%. So therefore, there is a possibility with NSE shifting its expiry day from Thursday to Monday that these volumes may shift from BSE to NSE. The possible offset out here could be the fact that market share on Thursdays could move towards BSE. Keep in mind that on Thursdays, generally the market share for BSE has averaged anywhere between 5 to 7% since Jan 2025. But BSE has been reeling under pressure not just today but over the last couple of sessions. Since its high in February, the stock has corrected by over 30% already. And towards the end of Feb, SEBI also published a consultation paper to bring down volatility in derivatives market. And Goldman Sachs says that this particularly does not bode well for exchanges where more than half of the top line comes in from derivatives contracts. Therefore, they've gone ahead, maintain a neutral rating. Goldman Sachs also on Monday cut its target price down to 4,880. But as of now, because of this shift in the weekly expiry that NSE did from Thursday to Monday, BSE is reeling under pressure on account of the potential volume shift.
For that, BSE shares are now at a 4-month low. Now, earlier today, we had a chat with Sriram Krishnan, Chief Business Development Officer at the National Stock Exchange, to understand the rationale as to why they decided to change the expiry date. Listen in.
Single day for all expiries in the entire market is the real solution. And so proliferation of weekly expiries on every day of the week through multiple exchanges, like MSCI, for example, has a plan. Likewise, NCDEX seems to have a plan, MCX seems to have a plan. Then there could be OTCI who might come up with a plan. So proliferation of weekly expiries through multiple exchanges is no different from one exchange potentially offering expiries on every day of the week. So perhaps, the solution lies in one single expiry for the entire market. Responsibility to collectively upgrade and build capacity in the market. Yeah. And if that's the case, then we should be limiting expiries with respect to the expiry day. And you've seen, expiry day shifts being undertaken by other exchanges, and there are also some new exchanges who are planning a foray into equity derivatives to launch weekly expiries. I think it all follows from the SEBI rules, which require only one expiry per exchange. But if the intention of the regulators is to have one expiry, I think it makes sense to choose the optimal day of the week. The rationale for this decision is more to take into account the fact that there are lots of geopolitical events, developments over the weekend, and Monday is a great day to therefore have the expiries.
Well, that's the rationale shared by National Stock Exchange. They also went on to say that it's not that they need prior approval from SEBI to make the date change, but they have intimated SEBI on the same. Coforge is the other one. It's a big mover, 11% higher on Coforge as we speak. This is after the company won its largest ever deal, $1.6 billion of deal spread over 13 years. Kotak, on the back of that, has upgraded Coforge to a buy target price at 9,000. They say the 18% recent correction seen in Coforge offers an attractive entry opportunity. Morgan Stanley believes the deal could add $80 to $120 million of incremental revenues in FY26. So the deal, the revenue accretion for the deal will be front-ended, and this is about 5 to 8% of incremental revenues in FY26. Their target price is 11,500. JP Morgan says expect this deal to elevate the company's ability to sign large and mega deals as it approaches their FY27 revenue target of $2 billion. They too overweight target price 11,500, and the deal also increases the company's presence, revenues, capability in the travel segment, which will now account 24%. So the street is bullish. Target prices all the way up to 11,500, with Kotak upgrading it. The company's also announced a stock split in the tune of about 1:5. One share will become 5 shares. And this is this large deal win because in the midst of uncertainty, the recent correction in IT names, the fact that Coforge went out there are such large deals in the pipeline, has lifted the spirit of most of the mid-cap IT names. So you're seeing gains between 4 to 5%. And it also comes in the back of about a 40% correction in many of these IT names from their 52-week highs. So for instance, Birlasoft is down 45% from its 52-week high. Scient is down nearly 40%. And even outperformers like Persistent have seen about a 20% correction from their recent peak levels. So it's, stocks have gone through a bit of pain, and this Coforge, a large deal win, has lifted the spirits across mid-cap IT names.
Absolutely, Reema. While we're seeing IT that's buzzing in trade, one pharma stock that's under pressure is Granules. And obviously, this has been going on for a while after their Gagillapur facility, which accounts for around 70% of their revenue. Obviously, there were observations from 483 that came in OAI warning letter last week. Now, we have gone through the warning letter today, and we have the details that came in for this warning letter. One, in terms of data integrity, quality, contamination issues are something that are highlighted in this warning letter. Key highlights that are coming in, the first point being that they said that the company has failed to establish and follow any written procedure for cleaning and maintenance of the equipment. So contamination that was found on that front. Other than that, there's a highlight coming in that they failed to maintain the building also in a good state. They said that there were insects, there were animals, small animals, as well as birds that were entering the plant. Bird droppings, feathers, all those issues were also that were seen in the plant. So that's a major one. Failure to calibrate, inspect and check the manufacturing equipment according to what the standards are supposed to be, which gives a risk in terms of the drug quality issues as well. So, right, these are drug quality issues which are coming in, which is a major concern. And other than that, in terms of inspector also found some records which were not maintained. There were torn records that were there, which included some balance printouts, testing data that was there, some other issues in terms of integrity front that come in. And that is why we're saying Granules India is in focus today. Company has always said that they're working with the US FDA. The last time they made their announcement last week for the US FDA issuing this warning letter. So it'll be key to watch out for because this may delay some approvals that are already coming in for the plant. As of now, it's a warning letter that we're seeing. That's come in Reema for Granules, and that is why the stock is under pressure, down 2% today itself. Last 6 months, it's down 40% approximately when we saw that first time, Gagillapur getting the US FDA Form 483 observations.
Let's move on and talk about Bharat Forge. North America Class A truck order details are out. Sudarshan joins in.
So Bharat Forge stock might be high in today's trade along with market, but the North America Class 8 truck orders that have come for the month of February are sharply lower, both month on month and year on year. Year on year, it's down 34%, and month on month, it's down 29%. It has come in at 17,000 units against 25,700 units in the same month last year and against 24,000 units last month. These orders have been declined for 5 consecutive months, and now it's lowest level since August 2024. Not only that, now FTR Intelligence Analyst. So FTR Intelligence is a website that tracks North America Class 8 truck orders, and that analyst says that these tariffs and counter tariffs will impact supply chains and increase the input cost, because 40% of US Class 8 trucks are built in Mexico and 65% of Canada's Class 8 trucks are built in the US. And because of this, orders for the following months or the next few months are also likely to be under pressure.
Okay, Sudarshan, thank you so much for that. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere, because after the break, we'll tell you what's happening in the world of commodities with Manisha Gupta. Welcome back. Thanks for staying tuned into Trading Hour on CNBC-TV18. Now let's shift focus to the commodity space. And Manisha is joining in with us. And today we're going to be focusing on metals, base metals, specifically, Manisha.
Well, thank you for that. If you look at the metal prices itself, we've seen a smart rebound happen in case of copper prices, 1.5% higher on that. Some support is seen on aluminum as well, but the steel and the iron ore prices have continued to decline. There you can see the base metals are firm, and the reason for that is the China statements. So let me take you through the two sets of fundamentals or factors that the metals are trading with. One, it's all about the tariffs, of course, because US now has imposed 25% tariffs on aluminum and steel, and there is conversation about copper. And then US also has imposed 20% tariffs on China now. Total comes to 20 now. US and China are the largest trading partners as well, especially when it comes to metals there. And China is the largest producer and consumer for many of these metals. Now, importantly, the second set of factors is about the China NDRC meeting, where China has said that they are going to maintain GDP at 5% for the third straight year, by the way. And then the pledges to raise local government bond issuance to record levels. And then there is also 1.3 trillion yuan being issued for special treasury bonds there. More importantly, they would promote steel sectors restructuring. Now, this is something that the China has been talking about for last decade, perhaps, but it does seem like this would happen now because all of these tariffs coming into being as well. Let me also remind you that 1 billion tons plus is what China does in sense of steel production. And there are expectations, while we still are awaiting clarity and numbers there, but nearly 50 million tons of potential reduction is what we could be looking at. But the big question that the street really is asking, one, what kind of impact would we see on prices on that? And two, if there is this tussle between US and China, does it really mean that much of this Chinese steel then would be coming into India? Let's pose those questions then to Aditya Velekar from Axis Securities. Mr. Velekar, hi, thank you so much for joining in. First of all, the steel restructuring that China is talking about, and we do feel the markets understand that this would come through this time around. What is your sense on that?
I think it's a sentimentally positive news. As you described, number one is on the China growth, GDP growth of 5%, which they have maintained. And another set which is positive is the fiscal deficit, which they have increased to 4%. The expectation was up to 3.5%. So there is a positive surprise on that. And higher fiscal deficit indicates that China is ready to focus more on infrastructure and other asset development. And coming to steel production cut, I think that is a major point which we have to look for. Although historically also we have seen several announcements by Chinese government that they will restrain steel production, but the kind of cut which we have seen was not very significant. But still, if you see over a period of 2020 to 2024, the steel output has been cut by 5.6%. So now there is a speculation that they will cut steel production by 50 million tons, which is still a speculation, and we will take it with a pinch of salt.
Sure.
But this, why this remains important is because with the tariffs and the global backdrop, the kind of exports which were coming out of China in calendar year 24, that was 20% year-on-year growth in exports, steel exports from China at 110 million tons, which is very significant, and it was putting a lot of pressure on ex-China steel prices, including India. So if the steel production cut materializes in China, that's a good news. And overall, the rally we have seen today in metal stocks is, as you have described, due to this economic data from China, which is reinforcing confidence. And at the same time, the valuations were at the mid-cycle level, were not very compelling, not very demanding. So these are the reasons we have seen some relief rally coming today.
So Aditya, while you've discussed both the scenarios, that it yet needs more clarity in sense of number, but if we do see that 50 million ton, one, what it would mean for India in sense of its exports, and the other fear on whether with all of this US and China tussle, would India again become a dumping ground, though enough steps have been taken or measures have been taken by the Indian government in that regard. But is that a fear that you would allow to?
That fear will remain because we, as I said, means we will have to monitor whether they really materialize. We have to see the monthly production data from China, how they cut their steel production, and whether that materializes. And Chinese prices are still at a very competitive level, and the export they dominate the export market, putting pressure on the domestic steel mills. What we have to see is whether this safeguard duty of 25% is what is expected from the government, and what the local steel mills have proposed to the government. That still is still in the process, and we have not heard so far anything on that. But overall, the space remains competitive. And the steel coming out of China is still at a much higher level. And the key trigger will be the restraint on exports, and that will only be driven by if the China reduces its domestic production, because its domestic consumption is not going to pick up in future, because the property sector is still in has almost stagnated now. Means although they are trying to stabilize the property sector, but the kind of growth we have witnessed in the previous decades, we may not see that in coming decade, and that is the reason the reduction in steel production is quite critical as far as steel industry for India and the rest of the world is concerned.
That point is well taken. So my final question really is about the kind of price moves that we have seen. We do understand that these are volatile times, and every day there is new data and statement and retaliation and reciprocal tariffs to react to. So how would you count the day as today, and what is it that you would look forward to now for the coming days?
So as far as steel prices are concerned, I guess both long and flat product prices, especially flat product prices, they have kind of bottomed out. We can see we don't foresee further downside to flat prices from the level which we have seen, the fall which we have seen recently. And with the pickup in overall activity and whatever China is saying, if they stick to that, then I think the prices should not fall from the level which we have seen. So that is our view. We are keeping our forecast of steel prices flat, and if there is an upside risk for prices to rise ahead.
Okay, Aditya, thank you so much, for joining in with us and giving us an understanding on the metal space and what we should be expecting also in terms of the recent updates coming in from China's front. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. After the break, we'll discuss market technicals with Mitesh Thakkar. So do stay tuned in. Welcome back. Thanks for staying tuned into Trading Hour on CNBC-TV18. Now let's bring on board Mitesh Thakkar to join us and give us a quick check on the technical front. Mitesh, good morning. And obviously today is one of those days we're seeing a strong up move coming in. for the markets. But do you think this is something that is going to be sustaining, or would we again start seeing a fall coming in? As of now, Nifty is around the 22,300 mark. What should we watch out for in terms of levels?
Good afternoon. I think, I've been maintaining that the first level which the Nifty had to capture was 22,150, which was done today, and now we are sustaining all that. The next level would be the gap down, which happened on last Friday, which is around 22,450, 22,500 zone. So I think we might have a bounce back to those levels. So I'm not sure if a big reversal is yet, but still looks like a pullback kind of a move, and therefore I'm not sure whether it will sustain or not. But in the near term, if you have had short positions, I think the idea was to cut them once we started getting past 22,150, and if you have a very small 1, 2, 3 days kind of horizon, then even take longs on the index, and 22,450, 500 is my target zone. Only if we start getting below beyond that, then I'll look at a bigger reversal. But for the timing, I believe it might be very difficult in the first go. So the immediate targets are around 22,450 to about 22,500.
24,450 to 24,500. What about individual stocks, Mitesh?
That's 22,450, not 24,450.
Sorry, 22,450. What about stocks?
On the stock side, metals as a pack is looking good. So I've identified National Aluminium. It's made multiple lows around this 177, 178 mark. Is reversing from there. So buy with a stop at 180. 181, look for a target of around 190 on the upside. And the other one is NTPC, which is given a strong buy signal on the hourly and the 2-hourly charts. So here, buy with a stop at 318 for targets of 335.
Thank you very much, Mitesh, for joining in. HDFC Bank is under pressure today, so that's down close to about 2/3 of a percentage point. So that's the reason why the Nifty Bank is also underperforming to some extent. And then you've got other financials. Bajaj Finance, we've been highlighting from the word go, has been weak in trade, down more than 2%. PB Fintech, Chola Invest, Innocent Bank, Bandhan Bank, Shriram Finance. These are some of the other financials, NBFC's banks, which are currently in the red right now. And IGI, International Gemological Institute. This is a stock which has fallen 20% this week. It fell 10% on the day of its numbers earlier, and now it's down another 2%. So it's not participating in the green that you can see on your screen, and the stock is way below its issue price of 417. IGI, International Gemological Institute. The street is concerned that as lab-grown diamonds pick up, the margins for the company could come under pressure. Get into a break. We just wanted to get your attention to Prime Minister Modi's Vantara visit. Prime Minister Modi inaugurated and visited the Wildlife Rescue, Rehabilitation and Conservation Centre. Vantara is home to more than 2,000 species and over 1.5 lakh rescued, endangered and threatened animals. Prime Minister Modi commended Anant Ambani and team for what he calls a compassionate effort, also calling Vantara a unique wildlife conservation, rescue and rehabilitation initiative which provides a safe haven for animals while promoting ecological sustainability and wildlife welfare. Reactions pour in from everywhere, with Anand Mahindra saying the level of care and expertise that Anant Ambani has put together at Vantara is truly impressive and cutting edge. Sachin Tendulkar says the passion and commitment of Anant and his team towards wildlife conservation is commendable, while actor Ranveer Singh hails the generosity, while filmmaker Karan Johar says Anand's compassion and care for animals is beyond admirable. Both of them call Prime Minister Modi's visit to Vantara a momentous occasion.
Welcome back to Trading Hour on CNBC-TV18. Now let's bring on board Pawan Parak, who's from Geojit Financial Services, joining in with us to discuss the market fundamentals, his top sectoral bets as well. Thank you so much, Pawan, for joining with us on the show, and good morning to you. Firstly, let's start with obviously the domestic market. How are we seeing that overall? Now, we're seeing a fall coming in the markets because there's a lot of global uncertainty that is going around as well. The Trump tariff issues, it's a bit of a jitter. Today, yes, markets are managing to hold on to gains, but fundamentally, domestic economy, how are you seeing that move now from here on?
Yeah, hi, good morning. So very clearly, I think domestic economy is, on gradually improving. Fundamentals are clearly improving. And the good thing to note out here is that now that election campaigning is all over, results are all done with, government along with RBI both have sprung into action to revive the economy. We've got rate cuts, we've got liquidity announcements, we've got tax cuts. And I think some more is there in the pipeline. So very clearly, I think domestic economy is back gradually on the way up. And to support the domestic economy, I think some of the other factors that I would want to say that despite the depreciation, INR depreciation hasn't been that very steep, and crude oil prices have now actually fallen. So take a 6-month, 1 year, 2 year view. I think I feel more positive about the growth sentiments than 3 months back. But having said that, from a market point of view, I think global scenario will keep markets on the edge. Tariff, no tariff, fentanyl, no fentanyl, trade war. I think these are things which will remain in to dominate the sentiments at least for next 1 or 2 months. I think Trump has been in action for last about 45 days or so. I think after 1 or 2 months, market will get a clear sense, as to in which direction eventually the policies will stabilize. And I think that is when next 1 or 2 months market should stabilize, and then gradually I think you should see a sharp up move in a lot of strong, heavily beaten down stocks.
Pavan, hi, morning. One of the casualties of this Trump tariff uncertainty has been Indian pharmaceutical companies, and many of them, have fallen quite a bit. How are you approaching pharma companies in the fall? And which is the pocket in pharma that you like right now?
Right. No, I think very clearly, in fact, in our portfolio also, we've been overweight pharma. Some of the stocks have actually fallen. But we are actually completely unperturbed with whatever's happened on this potential tariff thing. Very clearly, in terms of volumes, 45% of generic imports into US comes from India. Very clearly, irrespective whether the narrative from the US government is there, but I think very clearly in last 5 years, a lot of the large big pharma in US have also realized that they want to diversify out of China. It's a slow, gradual process, but take a 5-year view, it's positive India. So I think very clearly there's a lot of noise around pharma. On ground, if I were to see, I don't see any concern out there at all. If at all, I would view it positively, because if inflation was to be brought under control, if spending is to be brought under control, generic pharma from India only helps that cause. So I don't think, just because of the narrative, you should set into this story. In fact, in this fall, we've added more. What we've actually done is that we've started avoiding domestic pharma names because we think valuations are very high. On the contrary, some of these US-dominated or global-heavy businesses, be it CDMO or domestic formulations, those look pretty interesting to us.
Right, Pavan, one more thing that I want to also highlight, while pharma obviously does manage to look interesting, and despite what the fears everyone has around it, do you see earnings growth coming back in Q4, or do we have to wait for a couple of quarters? It's not been that exciting, right, on the India front. On that front, as well as on the real estate side, do you find that interesting as well as a bet? Because real estate also has seen a sharp fall coming in terms of stock-wise. So anything that you would look from the Nifty Realty side?
No, very clearly, I think on the real estate, it's a high beta sector. We all know, and it works high beta both on the way up and way down. That's the nature of the beast. And I think that's what happened. I think real estate has done extremely well in the last 3 years. Stocks have grown 2, 3, 4x. Right. And now when the chips are down, obviously these stocks have to fall. Having said that, I must tell you, that last 3, 4 years, there's been a clear trend of shift from unorganized to organized. In fact, that trend actually accelerated ever since RERA got implemented. And I think, that trend will further accelerate in next 5, 10 years. And that makes a lot of these real estate companies pretty attractive. I would rather believe that either you should buy companies which can potentially grow very fast, or then you buy companies which are more, say, MMR dominated, because historically we've seen that MMR is far more stable as a real estate, both price and volume wise. It's a far more stable business than, say, NCR or any other regional market in the country. So I think that is how we position ourselves in the real estate side. There's a way you can play real estate is through building materials, but again, there, that space doesn't really excite us, because there's a demand-supply mismatch in every subsector of building materials. So we are actually, so this entire building materials real estate theme, we are playing it through 1 or 2 real estate names in our portfolio.
Thank you, Pavan. Short conversation today, but an interesting one as always. We will slip into a very short break on that note. But as we do that, here is some good news for all our viewers. India's business news leader is now just a click away. We're introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. Download the app now from the Apple Store or Google Play Store, or you could just scan the QR code on your screen.
Welcome back. Thanks for staying tuned into Trading Hour on CNBC TV18. And we've seen that the Nifty has crossed the 22,300 levels. As of now, 22,350 days highest point, up 1.2% in today's trading session. Let's look at the names that are actually pulling out the market today. We have M&M, Reliance, Bharti Airtel, Infosys, among some of these other names that have been managing to hold on to good gains for the markets. Even the broader markets are managing to do well and hold on to good gains in today's trading session. So yes, the Nifty mid and small cap also comfortably outperforming the benchmark indices. Nifty mid cap is up more than 2%. Small cap also is managing to hold on to gains of 2.3%. Overall, the market is at the day's highest point. Some of the names in the broader market front, we have Redington, Coromandel International, we have Adani Green, Adani Energy, Oil India. Some of these names are surely managing to do well, and a lot of these Adani names I'm seeing are popping up on the positive end as of now in the broader market front. So that's interesting to watch out for. On the flip side, we do have few names that are under pressure: Anand Rathi Wealth, BSC, Go Digit General Insurance, and Granules among the top losers from the broader end of the market. But Rima, we do have Bharti Airtel also today that's in focus, right?
Indeed. So Bharti Airtel, there is a Motilal Oswal note which has come out where they've set the target price at 1985. They're saying the focus will now shift to capital allocation. Now, Bharti Airtel was always generating, cash flow, but it was using that cash flow to make its debt payments because of the amount that it had to, raise via debt for its spectrum payment, etc. But now they're saying that the leverage of the company is under control. The spectrum payments, the prepayment has largely been done. So now the free cash flow, which the company is accumulating, and it's sizable. It's, steadily improving because of tariff increases. So for instance, in the first 9 months, the free cash flow stands at 29,000 crore rupees, which compares with 21,000 the whole of last year. So every quarter you're seeing an improvement in free cash flow because of the tariff hikes. And they're saying this will only build up. Now you don't need to prepay your spectrum debt. That has been done. Your leverage is now under control. And therefore, this free cash flow can now be utilized. And one thing that they're watching is, will the company be able to increase its dividend payout? Because even the promoter has been buying stake in Airtel Africa. They went ahead and bought, stake in the UK, BT. British Telecom as well. So promoter needs money, and the best way is that, give dividends, which the promoter will also benefit. So that's the reason why Motilal Oswal is watching Bharti Airtel, and they're saying track capital allocation. That's going to be crucial for the stock price from here on, and the stock is higher by nearly 2%. By the way, the Nifty, it's constantly rising. It's 22,370 now on the Nifty. Asian Paints has rebounded from its 52-week low. It hit a 52-week low of 21,024, and from there, Asian Paints has added on close to about 40-50 rupees. Trent, which has been the other big loser, it's down 36% from its 52-week high. Many of these beaten down names are seeing buying. Trent, of course, has been seeing buying for this whole of this week, 9% up on a week-to-date basis, Monday, Tuesday, Wednesday. But Trent too is rebounding from beaten down levels, and IT continues to see buying interest even in the frontline pack, with Tech Mahindra Wipro coming in for incremental buying. Get into a break. On the other side, we'll get you more on the markets.
It's been the greatest privilege and honor to have represented India for such a long period of time, because wherever I played, the flag was flown. Wherever I played, the anthem was sung. And that feeling can never, ever leave you for the rest of your life. We all felt, traumatized by loss. And then of course when you go out in public, they remind you of it, and they tell you, how could you lose that match? You were leading, you destroyed me and my family. We were watching you till the cows come home, and And only if you worked a little bit harder, you could have won that match, Those kinds of things come at you. And even to this day, 30, 40 years later, people are reminded of matches that
were lost.
I've lived overseas for 45 years, but I still carry my Indian passport.
You haven't given that up?
No, I'm Indian. And I will always be Indian. It's a feeling that is within me, and it can never go away. Since independence, collectively, we have won less medals than one American athlete.
Yeah.
One guy has won more than all of us put together since independence.
Yeah. Welcome back to Trading Hour on CNBC-TV18. Oh, breaking a glass is surely good luck, and seems like it's not broken yet, but we do have good luck coming in for the markets because we've seen 100-point uptick just in the last 1 hour when you look at the Nifty. As of now, 22,360 levels. When we started the show, it was at 22,284 approximately. So surely a good move coming in the markets from the lows that we've seen in the recent time. A good recovery. And yesterday itself, also, we saw that some bit of a recovery coming in. But nonetheless, today is surely a green day coming in for the markets, uptick of 1% across the board. Nifty Bank also is holding on to gains of almost 0.7%. All sectors in the green. So interesting day coming in for the markets. But with that, we're going to wind down this edition of Trading Hour. So thank you so much for tuning in. It's a goodbye from Reema, myself, as well as the team who put this show together. Don't go anywhere. Halftime report up next.